Hello everyone. This is a very different topic than what I usually do. It is not a topic which is directly related to NRI finance, but it touches 66% of the NRIs who are spread across the globe on day-to-day basis. If you don't understand what I'm talking about, let me come to the point directly. Today I'm going to analyze a retail giant which has its roots in India, but it has spread predominantly across different GCC countries and operates from UAE, Saudi Arabia, Kuwait, Qatar, Oman, Bahrain, where 88.8 lakhs NRIs live, which constitutes almost 66% of the total NRI population. Yes, you guessed it right. I'm talking about the retail giant Lulu Group. Lulu is going public this week by getting listed in ADX or Abu Dhabi Stock Exchange this week. This IPO has created huge buzz here and considered as one of the mega listing in recent days. In this video, I'm going to do a detailed analysis of the Lulu's business model and the financial metrics. So it will help you to decide whether you should consider applying to the IPO or not. If you are interested to apply from both within UAE and from outside UAE, what you should be doing, what are the steps that you should consider. That is how I'm going to explain everything in detail. So stay tuned till the end. If you are new to this channel, I am CS Keerthana. I run Dhee Consultancy, a firm which is specialized in NRI services. Based in Dubai, we offer NRI investing, finance, tax and FEMA services. If you are looking for any of these services, please book your appointment by visiting www.keerthisfinfo.com or contacting the number which you can see on the screen through WhatsApp. Just to give a brief background of my credentials, I am a CS from India and CIMA strategic level from UK, also SEBI registered overseas MFT. Every week, I bring and explain a video on various NRI topics in this channel. So if you are looking for any tax, investment or FEMA related issues, then you know what you have to do. Just press the subscribe button. Yes, it matters a lot. Please consider subscribing this channel and like the video, share it in your circle, so it means huge encouragement to all the efforts that I'm putting here. Now let's go back to the topic. As I told in the beginning, because of the sheer scale and the buzz that Lulu IPO has created, today we are going to take slightly different topic. In this video, I will try to give every perspective that you need to know before you make a decision whether to invest or not in this IPO. So in this video, I'm going to analyze first what are the business and the financial metrics of Lulu business model. I'm going to explain in layman terms, trying to keep it as simple as I can. So what are the business fundamentals? What is company's revenue growth, profitability trend? What is the competitive strength or advantage they have got? Little bit of balance sheet analysis and the risk factors which you should be knowing if you are considering investing. By the end of the video, I hope I will be able to give you enough material or points which will be setting a foundation for your decision whether you have to invest or not in this IPO. Second, in this video, if you have decided to invest in IPO, then what are the steps that you need to follow? How to invest? Remember, the process is different for the people who are residing within UAE and who are investing from other foreign countries. Don't worry, I'm going to explain both the processes. Finally, last but not the least, I'm also going to reveal what are my strategies. Am I considering to apply or not? So let's start. If you don't know Lulu, just to give little background of it, Lulu is the largest retail group in Pan GCC in terms of selling space, revenue and number of stores. Its selling space is mainly divided into online and offline, and in this brick and mortar channels you have hypermarket with 9,200 square meters, express stores spread across 2,400 square meters and mini markets with 160 square meters, and our e-commerce space which includes mobile app and its website. See, in offline space they have 240 stores which serve 600,000 customers on daily basis, and in online space 300,000 is the size of visitors that they have. This should give you a glimpse of this giant business. So let's look at their strength. First one is business location. See, when I'm talking about the stores, let me tell you, in this retail business model, the location of the stores is of extreme importance. They shouldn't have competitors located nearby, and they should have some dense population in that area or some advantage whereby it is easy for them to attract some sort of customer traffic. So Lulu is very well placed here. And if you look at the macros, even they are supportive because they are operating in GCC countries where many economies economies like Dubai or KSA, which are witnessing robust growth because of their transformative agenda. They plan to attract most of the people and build a diversified economy. You know, the real GDP in GCC is 3.4% and the global average is just 3.1%. Even when you consider personal disposable income, in GCC it is expected to grow at 3.9%. These all macroeconomic factors can give huge boost to the top line or revenue of Lulu. Second strength is global sourcing network and logistics. I can't tell you how important even this is. This is actually a competitive advantage for Lulu because it has a global sourcing network and logistics, and it has on-ground sourcing officers, and it sources from nearly 85 countries, catering to the needs of different customers from diverse backgrounds. It has centralized sourcing network with 20 large suppliers. Lulu has established long and very good relationship with the suppliers for more than 2 decades, which gives them control over quality, variety, innovation, and also bargaining power while sourcing or in procurement. In customer segment also, they have a long history of operation, you see. This helps them to understand the changing preferences or needs, expectations, trends, and move with agility and strategically plan. For example, now if you visit Lulu, you will see separate shelf for organic, vegan, or even plant-based products. Even during the COVID times, they started offering the most demanded products such as masks, gloves at a very affordable price. So when Lulu has this kind of economy of scale to its advantage, it can always procure high demand products also before its competitors and offer it to the customers. If you see Lulu's prospectus, it clearly shows that Lulu is not at all depending on one single supplier or few suppliers. It has multiple suppliers, and no single supplier is having more than 1.3% of the group supply, which ensures that there is supply always. Lulu is also planning to use machine learning, predictive learning algorithms to forecast the demand and analyze the trend, improve the efficiency in inventory management. See, this procurement strategy matters a lot for this kind of business model. So they can attract target customers, offer them the variety that they are looking for, and satisfy their needs or preferences without any interruption. I'm sure whoever visits Lulu would have observed one more thing. Lulu started increasing its own private label products also because, see, they have an advantage here. The sourcing strategy is important, and Lulu has mastered it. Lulu has a competitive advantage in terms of economy of scale. It knows its suppliers, customers, everything. We all know how they offer products at competitive, affordable price. So their pricing strategy is good. Why not start your own products? That is the reason that you see more and more Lulu branded products on the shelves of Lulu. Let's take up the third point, visibility. Lulu is a brand which is known for the value. If you want anything at an affordable price, then suddenly what you remember is Lulu as a first choice. So they could successfully register themselves as a value brand in your mind. I'm sure you will agree with this. In business, visibility is very important, no matter how strong the brand is. Lulu primarily has direct marketing. Even here they use many strategies such as brochures, digital flyers, shopping festivals, digital marketing, happiness program, and co-branded credit cards with a bank, etc. See, in this chart, you can clearly see the majority of the sales are generated in Qatar and in Dubai from loyal or repetitive customers. This is a very healthy trend. When you are making investment, I always believe that blocking or managing the risk is more important than anything else. Because if the pick is right, and you are able to manage the risk well, then return can take care of itself. Now that we know broadly what are the competitive advantage that they have, let's look at the key risk factors. Actually, the opposite of the competitive advantage itself has risk factors for retail businesses. Let's see what are the areas that one should be looking for as business risk while analyzing the model. First one is changes in the consumer spending. The sale growth largely depends upon consumer spending. So their disposable income, discretionary income shouldn't deteriorate for any reason, because if it happens, Lulu will suffer. So Lulu should capture the trends in buying habits, always be the first one to offer it at an affordable price, and should also be retaining the customers, which is very tough strategy. So it needs to monitor many areas here. Agility, ability to build the supply chain to offer the products first, and product mix decides the existence and profitability here. For example, if there is recession, definitely this model will take the first hit. And if they don't offer, for example, vegan or organic or fitness related brands or responsibly sourced products, it may lose out on young consumers. And pricing is actually in Lulu targeting the mid-level income. So if the price is too much, if it is not affordable, then again they are losing the edge there. So aggressive pricing strategy, appropriate product mix, use of technology, competitors benchmarking, agility, technology, observing the key trends, everything is important for Lulu. One more additional factor here is Lulu can't always pass the inflation burden on the end user. The supply chain risk management is very critical here because neither they can negotiate more with the customer nor they can bargain more with the supplier. Somewhere they have to find a balance where they can maintain an affordable price while selling it to the end user or consumer and also manage to procure the raw materials or the inputs at an affordable price, maintaining the quality without harming the brand from the suppliers. So supply chain risk management is a very critical factor here. Second one is location and cost. See, this is another threat. Ability to buy or get the land on lease in the location that they have more customer accessibility and suitability. For example, if there is less parking place or parking place is limited, then people may not prefer those stores, right? 227 stores are currently leased for 1 to 40 years by Lulu for fixed rent with the step-up options, which is working in their favor. If the terms of the lease is to change in the future, then Lulu suffers. One of the way to manage risk is to boost the online scale, which the group is already focusing a lot. So, in the financial statements, you can see that the commercial sale in online space had gone up from 75 to 192 million just between 2021 to 2023. That doesn't mean that this online space has no risk. They have to manage personal data, data security, privacy, third-party provider in the whole IT system. So these risks should not be let to materialize so as to disrupt or cost any financial damage to the model. Third one, as I was referring earlier, inability to pass the cost on the end user. This is very important area where an investor should always be monitoring. Lulu has from 2021 itself around 20 to 21% operating expenses. This can balloon at any time. Maybe the wages will increase, supplier price hike will be there, rent hike will be there. Moreover, Lulu functions in the region where government has price control. So it won't be easy to pass the burden on the consumer or the customers easily without taking multiple approval from the relevant government authority. See, there is a pricing policy even in UAE for essential consumer goods where the government always is monitoring and it sets the control measures so essential goods such as eggs, rice, milk, oil, bread, etc. doesn't shoot up. This also can pose significant risk to the operating margin of Lulu. Next is supply chain risk management. This is a critical aspect. See, the brand has to offer the product as per the changing trend, maintain the quality, then supply chain management is everything. Lulu has 1 to 30 years of supply agreements and if anything has to be renewed at a term which is not favorable, then it is going to take profit down. Even in the private labeled goods, 7 to 9% is attributed to the top 10 suppliers. So maintaining good healthy relationship beyond transaction matters here. You may think, why is it so difficult for a Lulu group to find a replacement? Well, it's not difficult, but it takes time to find and ensure that they are fitting in their quality control assessments, execute the necessary contracts. So when this cycle is completed, there will be of course reduced supply or inventory level which can disappoint the ultimate consumer. Let me give you another example here. See, launching and making a target market to accept their private label product is not at all easy. But once Lulu succeeds here, then it always finds a way to control cost, maintain margin, reduce the dependence. Now, majority of these goods are sourced from third-party providers or suppliers. So, supplier management is a critical aspect here. How they are going to maintain quality or help in building the brand which defines a future success. For example, if Lulu launches a cruelty-free cosmetics brand, then it should ensure that the supplier or the producer did not test it on the animals. They have maintained the ethical standards. If there is any violation of the ethical practices which were supposed to be followed, then their brand is just gone. The loss is going to be beyond money because it will tarnish the brand. I hope you got an idea here. The next is fifth point, maintaining appropriate level of inventory. So this is literally like walking on the rope because it can't be high. It will eat into your profit. If the inventory is too low, then the demands can't be met. The inventory level should be maintained at a level as per the changing consumer spending level, habits, interest, weather condition, inflation, market acceptance of the new products and what not. As of now, inventory write-off is just 1 to 1.3%. If at all this number has to increase, remember Lulu's profit will decrease. It will be a direct hit into the profit. There are many other risks which typically any retail business will face. This is the risk for being in business actually. Maybe it is like staff shortage, compliance risk, overheads increase, cyber attacks, bank financing, managing credit facility, etc. When you observe the macros here for Lulu, the government pricing control, tensions in the Middle East, if at all it causes any unrest, or any change in the government policy can significantly affect their business. But what we need to know by now is Lulu is a brand which is a combination of affordable, premium and value. Its ability to find new customers, understand the consumer's preference, offer them at an affordable price and make customers also feel valued, retention and overall stakeholder management and strict cost control will give them profit sustainably. I focus a lot on non-financial aspects and do a top-down approach of analysis always while analyzing any kind of business model because I strongly believe that the numbers are coming from this non-financial base. So the business strength and the weakness or the threats matter more than the balance sheet number for me. As an investor, we should do a little bit of number crunching also. We can't totally ignore balance sheet, but it is just to understand what is the financial risk or the strength of the business. Let's take up the consolidated balance sheet. I will not go in detail analyzing every topic because I know that it is very difficult for a common person to understand. So let's just take important parameters. The group did not increase the investment in plant and property from 2023. It is staying at the same level. It's well managed. Inventory level is also well managed. Trade receivables are little up by 18%. It's okay because, credit facility is a part of any transaction. The dues from related parties is significantly down, which is really good. The cash level is up by almost 14%. Maybe it is because assets held for the sale is actually sold. In equity side, other reserves are up and liabilities show that bank borrowings have reduced and lease liabilities also going down. Trade payable bank loans have slightly gone up, which shows that companies managing cash cycles effectively. Really good. Now, when you are taking the numbers between 2023 to 2024, revenue is increased by 7%. See, this is where it gets interesting. Gross profit is increased by 6.8%, but profit is increased by 28%. What does it mean? It means company is able to control the cost effectively. And after adjusting the other comprehensive income, profit and loss from the discontinued operation, it goes up to 65%. So the EPS for the continued operation is $0.58. Even in the cash flow statement, we have very good, healthy cash flow generated from the operations. Another interesting fact here is, if you go and analyze the segment-wise contribution, UAE is leading with 704,892,000, followed by Qatar, KSA, Oman and Kuwait in 2024. UAE is topping in revenue contribution from 2021. So now analyze it in the context of UAE economy, its ambitious plan of D33, increasing the population, skilled population, making it as the best livable city, etc. So now Lulu can capture the growth, a percentage of the growth that Dubai wants to have, right? By now you would have understood the broad parameters or the metrics of analyzing. And now let us see how allotment is happening and how investors can apply. See, the offer will be made on the 3 tranches. First, second and third tranches. It will start from 28th of October and close on 5th of November. For the first tranche, minimum subscription is set at 5,000 AED. And if any additional investment you want to make, then it should be at least by 1000 AED. For second tranche, the minimum subscription is 5 million AED. Now don't get surprised. This is mainly for the subscription of professional investors such as central banks, international bodies, financial institutions, family officers, natural person who's having net worth of more than 4 million AED, excluding the primary residence, etc. So you should be thinking about the first, probably. I am sure you are falling in the first or third category. The third tranche, the application size is around 50,000 AED. And any additional application should be with minimum of 1000 AED. Now what is the offer price? We will come to know before October 28th or offer period commences. Why? Because Lulu has set book building process. Now I don't want to explain the complex terms here and make you further confused about this. It is a simple process where company tries to understand the demand for the shares by inviting the investment from certain class of investors. So accordingly, that will build the order and see that what can be the offer price for the shares. So this is in advance, they are able to estimate the demand and then accordingly set the price. So just think that book building is the process. That's why the offer price will be announced only before 28th of October. So as I was telling, obviously the first and third tranche matters most for retail NRI investors. What is required here is your valid passport, bank account and NIN or investor number created with ADX. NIN means National Investor Number. This is an unique identifier code which allows to invest in UAE exchanges, be it Nasdaq, Dubai, DFM or ADX. So to buy or sell or to receive the dividend, you must have NIN. You can apply in DFM or ADX. So let's take up the example of ADX here, that is Abu Dhabi Security Exchange. How can you obtain? If you are a UAE resident, just go to ADX e-services portal and select apply for NIN, submit all the details which is required such as your banking details and national Emirates ID, and then complete the KYC, submit the application online. Or you can also visit the investor desk personally and submit all the documents and the details required. Third option is using Sahmi app, where you just have to give your UAE pass that will retrieve all the information from UAE pass. Then you have to enter the email address, contact number, IBAN and other details. Click issue investor number. Entire process is done in just 1 minute or lesser. So this allows you to apply for IPO. Now let's go to the scenario. What if you are not a resident of UAE? Can you invest here? Answer is yes, you can invest. Procedure is almost same as just I said. If you are in a foreign country, you need to submit your passport number or the passport details and provide international bank account number and bank letter providing that bank account is solely in the name of the applicant or the investor who is applying, not a joint bank account. Then the procedure is go to ADX and obtain NIN. I hope the process is clear here. If you want to have a step-by-step guide, I have included ADX portal link in the description. You can go and check. This Lulu IPO has brought a good news to Lulu employees also, because all eligible employees are offered guaranteed subscription of 2,000 shares. Now to apply for IPO, what are the documents required for application? As I told, I repeat, it is NIN, Emirates ID, valid passport. In case if the subscriber has authorized to apply through power of attorney, then you need to have an attested copy of power of attorney. And the subscription application can be done physically or electronically in any of the receiving banks such as FAB, Dubai Islamic Bank. And when you are going to click the link there, that will retrieve all the information from ADX portal, debit the money, and it's a simple process. The detail is actually given in the description. If you're using any of the bank, be it Mashreq or Emirates NBD or First Abu Dhabi Bank, find all the details there. Even the page number 39 of the prospectus of Lulu has a detailed description of it. Now I also want you to know that if there is a surplus subscription, then it will be credited after 5 days of closing the tranche. Now before I conclude, I just want to keep things open about what I'm doing. I believe that retail business has a huge scope in Middle East. Lulu can be compared actually with India's DMart in terms of nature of the business and economy of the scale. Since it's spread across multiple countries and it has its own risk and advantage, DMart had a cost advantage, probably little more than Lulu. But see, Lulu is also able to control the cost if you look at the balance sheet numbers, and it is a well-established brand that has rich experience and economy of scale in its favor. See, in this business, it's very difficult to go big. Once you go big, most of the things are solved. So over the years, Lulu promoters also have found a way to navigate the complex set of challenges. If you see the board, the average expertise age of the management is more than 35 years. So considering all the factors, I am going to apply to IPO. I expect the Lulu IPO to get oversubscribed, and I also expect to get at least with some positive gains. It depending on the percentage of the gain and the number of the shares that I'm going to get in IPO, I will decide how much to retain for long term, medium term, etc. So this is what I will be doing. I hope the video gives you enough data points for you to make your own decision. See, Before I conclude, I want to make one thing very clear. This video is not a recommendation to invest in Lulu IPO. It is not a paid endorsement. Nobody has paid me or approached me to do this video. Looking at the request of my viewers, I myself have decided to make this video just for educational purpose. You should do your own due diligence. If you are considering investing in IPO, please consult your financial advisor or do your own research. That's it for today. See you with another interesting topic next week. Till then, bye-bye.